What's up, guys? I'm Elise Palacios, and I help real estate agents and team leaders get from production to legacy through increasing their sales business and implementing passive income opportunities in their life. With every video, it's my goal to give you at least one actionable step that you can put directly into your business to help you reach your income goals. If you're looking for the tools, strategies, and community to help you grow your real estate sales business or scale your investment portfolio, click the link below to head over to our REinvest Real Estate School community. One of the most common questions that real estate investors ask us is, should I invest in short-term rentals through Airbnb and VRBO or stick with long-term rentals through a traditional tenant long-term lease? And here's the thing, both strategies work. I personally know short-term rental investors who are crushing it in that market. And I've personally invested in a short-term rental opportunity directly on the water in the Bahamas. And I also know others who swear by the long-term, passive, steady income that long-term rentals offer. And I've also invested in that market in the past. But the real question isn't which one's better, it's which one's better for you. Each comes with its own risks, benefits, and level of involvement. So today I'm breaking it all down. We're going to go over the pros and cons to both short-term rentals and long-term rentals, and you can decide which is better for your investment goals. By the end of this video, you'll have the clarity to move forward with confidence. And if you'd like more information on how to make these rental strategies work for you, click the link below and head on over to our free school community. All right, let's get into it. Short-term rentals, high cash flow, high effort. The Airbnbs, VRBOs, and vacation rentals of the world. Let's start with the pros. There's higher earning potential. You can generate 2 to 3 times as much income with a short-term rental as you can a long-term lease in high tourist areas or really popular metro hubs. There's also the flexibility. Because you're not locked into a long-term lease, you're able to adjust pricing based on the demand, take advantage of peak seasons, and also block off time for your own personal use. And there are certain tax benefits to owning a short-term rental. Depending on your usage, your short-term rental may qualify for tax advantages, deductions on furnishings, utilities, and even travel expenses. Now let's go over the cons of owning a short-term rental. There's far more hands-on management. With guests checking in and out regularly, there's more maintenance, cleanings, and communication, which can easily turn into a full-time job if you don't have an effective property manager or systems in place. You're also dependent on the market. Your income is directly related to the tourism, the competition from other short-term rentals in the area, and seasonality of the location you're in. And the last con we've heard a lot about lately, it's regulations on renting in a short-term capacity. Different towns and cities are cracking down on short-term rentals because it's pushing a lot of long-term tenants out of the market. There are also regulation risks. It's important to know that many cities have implemented strict rules and bans on short-term rentals, sometimes requiring expensive permits, limiting how often you can rent your property, or cracking down on noise ordinances due to complaints from neighbors. I can't stress how important it is to do your research before purchasing a short-term rental. Go to town hall, find out what restrictions are currently in place, and also do some digging on what might be coming to fruition. Are short-term rentals a hot topic at town meetings? Go on your social media platforms, to community Facebook pages and groups to see if it's been something that's been discussed already. Short-term rentals are best for investors looking for a higher cash flow, and they're okay being a little bit more hands-on or hiring a property manager. Those in tourist-heavy or high-demand markets where short-term rentals thrive. And most importantly, it's for investors who have weighed the pros and cons and are comfortable taking on a little bit of income volatility and market fluctuation risk. Now let's talk about long-term rentals, your traditional tenant lease agreements that favor stability over cash flow. There are a lot of pros, ranging all the way from consistent, steady income. With long-term tenants, you don't have to worry about a weekly rate, daily rate. You have consistent monthly income with good tenants. There's lower management effort. Of course, you still get those late night calls every once in a while, but it's a lot less of upfront activity to manage a long-term rental. Your turnovers are far less frequent, and there's a lot less to manage on the day-to-day. There's also less regulation risk. In most areas, there's consistent landlord-tenant laws, making it easier to operate without sudden changes or bans. Now let's go over the cons of owning long-term rentals. There's lower monthly cash flow. You're locked into how much you can charge, especially in comparison to short-term rentals in high-demand areas. There's also tenant risks. A bad tenant can mean missed rent payments, legal headaches, and an eviction that can take months to complete. There's also the risk of property damage, which is still relevant in a short-term rental market, but typically that higher cash flow offsets the damage that may come up for those rentals. There's limited flexibility when it comes to pricing. You can't adjust your pricing for peak seasons or higher demand. You're typically locked in between 6 to 12 months for a standard rental. Long-term rentals are best for investors who are looking for consistent passive income, who don't want to deal with the volatility of a short-term rental market and are happy with minimal management and oversight. And of course, if you're in an area with lower tourism and short-term rental demand is low. The million-dollar question is, which one is more profitable, short-term rentals or long-term rentals? And that comes down to the property, location, and your ability to manage the business. A short-term rental in a high-demand area could net you between $5,000 to $25,000 a month, but it's gonna come with higher expenses, more turnover, and hands-on management. A long-term rental in the same location might bring in $2,500 a month, but it's steady, passive, and requires way less of your time. One thing to consider is that short-term rentals look great on paper, but don't forget that they come along with hidden costs, higher management fees, and constant maintenance. If you're serious about maximizing profit, you need to run the numbers on both and make sure that the additional time that a short-term rental is going to demand of you is worth the additional income. So which one is right for you? The best rental strategy is going to be dependent on your income goals. If you prioritize high cash flow, short-term rentals might be it. If you prioritize consistent, steady, more passive income, long-term rentals might be a better fit. Determine your risk tolerance. Short-term rentals have more unpredictability but offer a higher upside, while long-term rentals are steady but may grow slower. Factor in your ideal level of involvement. If you're looking for passive, steady, and easier maintenance, stick with long-term rentals. If you're open to running your short-term rental like a business and implementing systems, they might be extremely lucrative for you. Now it's your turn. Drop a comment in our free Skool community and let me know which strategy you're leaning towards. Are you team short-term rental, higher cash flow, or team long-term rental for stability? And if you're serious about scaling your rental portfolio, access Skool for our full training modules that's going to help you increase cash flow, maximize your tax benefits, and implement systems to help you run your rental portfolio like a business for long-term success. I'll see you in there, and don't forget to subscribe. We post new real estate content weekly.